Hello and welcome to etbfsi.com. You're watching FinTech Diary. The world of FinTech is constantly changing and we map these changes or the trends for you. In this episode of FinTech Diary, I have with me Avinash Godkhindi, the MD and CEO of Zaggle. Avinash, glad to have you on this show.
Pleasure. Thank you for having me.
To begin with, you are one of the rare FinTech company or a tech fin company operating in a SaaS, which is not only listed, but more importantly, a profitable one, where most of the fintechs today are trying to be profitable and sustainable. In fact, they're struggling a lot. What are the products actually make you profitable? What are the major growth drivers of Zaggle? If you could share to begin with, would be really meaningful.
Sure. So I think we are in a unique space, which is an evolving space in India. It's a nascent space called spend management. We're the largest spend management company. Globally, this is a very evolved space. Today, you've got multi-billion-dollar listed companies like Corpay, Bex. You've got unlisted companies like Brex, Ramp, etc. And the way I describe this is 30 years ago, ERPs were unknown. 20 years ago, HRMS was relatively unknown. 10 years ago, CRM was relatively unknown. We believe in 10 years' time in India, spend management would be a very well understood category, right? So basically, we help digitize spends for corporate customers for all their spends outside of budgeted capex. So whether it's your employee spends, whether it's your vendor payouts, whether it's your channel partner spends, all these spends that come on the expense side of a P&L, we help them digitize, track these spends, optimize these spends, reduce leakage and fraud, reduce your compliance slippages. We help you reduce your manpower costs. So that is the benefit that we bring to corporate customers.
Right. I understand that you have maybe 5 to 6 important solutions that you're offering, from even international payments to spend management to rewards and recognition. Which one of is more successful, and what is the major problem that you're solving?
So if you look at any corporate customer today, we look at it holistically as spends, right? So from a corporate customer's perspective, for them, what is it that their expectation is? They want to be able to track their expenses. Where is the money being spent? They want to be able to make sure that these spends and the receipts and the invoices, etc., are easily reconciled.
Right.
Because that's a big challenge in book closure, etc. And they want all this information to stay on the cloud or somewhere where they can easily retrieve it for decade plus, right? So we solve these problems for the corporate. Our solutions, we have a solution called Save for Employees, which is employee expenses and benefits. We have a solution called Zoyer, which is our accounts payable platform. We have Propel for channel incentives. And each of these products has a very large base of corporate customers. Today, our overall corporate customer base is over 3,200 corporates.
Right.
And most of them are enterprise and mid-market customers. We have more than 3 million users. So the whole idea is to give a holistic solution to a corporate. And typically, we know that a corporate can, pick up at least a couple of our solutions.
Right. Generally, corporates, clients, customers look to invest money. You are asking them to spend judiciously, and then you are making money, profitable also. How did you map all this?
Great question. So ultimately, look, the reality of running a business is you will have expenses, right? And the benefit of being on this side of the P&L is there will be scenarios where companies' revenues will go up or down, but expenses is one thing which you'll always try to keep an eye and keep it as low as possible, right? And as the country has seen, tailwinds in terms of, the internet penetration, the mobile revolution, the demonetization coming in, GST, COVID, all these, tailwinds have really pushed companies to become more and more organized, more and more structured in their approach towards how they're spending money. There was a time, maybe a decade plus ago, where a lot of transactions would be in cash.
Right.
What it meant is that there was a lot of inefficiency, there was a lot of leakage, but people used to consider it as, par for course, because that was the norm then. I think that trend has changed. Today, the norm is that you pay digitally, whether it's a UPI transaction, whether it's RTGS, NEFT, a credit card transaction. And we have gained in a big way from that, right? So corporates understand that they have expenses. What they're looking for is how do we optimize on those expenses? And the thing which really annoys CFOs or CEOs is any sort of, wastage or leakage.
Right.
That's something that companies just abhor.
Okay, noted your points. So do you actually track how much an employee is spending on the sandwich and the coffee and the travel and telling the employer, okay, here is the segment where you can actually reduce the cost or you can put some processes there and optimize the cost?
So we capture the data, right? And we present the data to both the employee as well as the employer. And we classify that data across categories, as you mentioned, and across project codes, cost codes, because we have ERP integrations. The funny thing that we realized, Amol, is that companies had been looking at this stuff, but doing it through a manual process, right? As in Excel and pivot tables. So a lot of the analysis would go wrong. A lot of manpower would be deployed there. And it was all delayed. So when you don't have data, you're always afraid.
Yes.
The thesis is until I know that you are not doing something wrong and I don't have that information, the fear that, a lot of people are misusing the system is also psychologically very high. When you actually see real-time data, when you see those dashboards, when you see those analytics, you actually know that these are bona fide transactions. Companies, I don't think, have a problem whether you eat another extra sandwich or, another coffee. The problem is, सच में खाया क्या?
Yeah, that's a
right?
good question.
Or was it something that you just picked up a receipt from somewhere and you scanned? That's the thing that they have a problem. And I think...
But you are providing such granular data as well on that?
Yes.
Okay.
Because you're capturing that data. So there are a lot of companies who don't bother what you ate, but they do bother how much did you spend on food, for example, right? How much did you spend on your local conveyance and travel? How much did you spend on your airline tickets if you're booking it them yourself, or hotels, or other incidentals. So companies do classify and see and compare it across, different projects, different, cost codes, and say, hey, this project code or different locations, and say, hey, folks in Mumbai are, spending less, folks in some other city are spending more. Why is that? Right?
Oh, sure. And how have you made a business model on the basis of this? How do you charge those companies on your solution? You charge on a fees basis, you charge on a product basis. How is the business proposition working over there for you?
See, our thesis is to charge for software plus the transactions, right? So make money on both sides, because our understanding of at least the Indian market is an Indian customer is always looking for a scenario where you deliver value which is X, and they are paying 0.2X, right? A few years ago, a decade plus ago, when we started, propensity to pay for software was very low, right? Today, that scenario has changed quite significantly, right? There is propensity to pay. Companies understand that there is value, but they still would like a deal where they're getting a lot more value than what they're paying for, right? And that's where income from the transactions becomes a very good accompaniment or a supplement to the software fees. So we earn on the transactions through interchange. We, of course, charge a SaaS fee, so per user, per month fee for our corporate customers.
Noted. It's been more than a decade for you, since you started this company. There are many other companies also started maybe in 7-8 years, but very few are actually even generating a profit on an EBITDA level, right? Profitable is a big question for them. What made you profitable, Avinash, and how long did it take for you to become profitable?
So we're profitable. We're about 13 and a half, 14 years now in our journey, and we're profitable for the last 5+ years. I think generally we've been very profit focused. We've also resisted going behind fads. So we were not in the game of being the coolest fintech on the street. So I think that has helped us a lot. For example, I'll tell you, right, when the craze to launch wallets came in, and everybody had a wallet of their own,
Yeah.
right? I remember my driver asked me in Marathi, "Sir, hamara wallet when will we
Yes,
get our
yes.
wallet?" Right? So that was the time when I understood that maybe we shouldn't do it, because if my driver is feeling that we should have a wallet, then it's too, because we couldn't figure out. And I won't claim that we had a premonition that UPI is going to come. Right? We didn't know, but we couldn't figure out is anybody going to make money on a P2P transaction where the person who's transferring is not willing to pay, the person who's receiving is not willing to pay. Paisa kaise banega? How are you going to make money? Right? So that was the question that was on our mind.
So you purposely didn't get into this space because you thought that it cannot be profitable.
Correct. Wow, correct. The other thing that has helped us a lot, again, doing things which are against the popular trend, right, being contrarian, was where we have been acutely focused on being compliant.
Right.
I'll give you another concrete example. Right, there was a big trend of credit on prepaid, right, and we're the largest issuer of prepaid cards in the country. We were one of the largest, if not the largest then as well. I think we were the largest. But we didn't issue a single credit on prepaid card in those days, right? And we had a lot of pressure from, variety of stakeholders, let me put it this way, saying, why aren't you doing this? This is, very good business. This is really taking off. There are a bunch of, fintechs who have catapulted to a unicorn status.
Right.
And you have all the wherewithal and all the capability, and yet you are not tapping into the opportunity. And we used to give vague answers saying, hey, we don't have the tech or whatever. We had all the capability, but it didn't seem to us as a 100% kosher use case. We could sense that, RBI may come sooner or later and put a clamp down on this because is it a credit card? Is it a prepaid card?
Right.
And when you create a confusing scenario in a country like India, especially where you've got a very diverse population and a large population, you don't want the consumer to be confused.
Yeah.
Right? Even if one person is confused, that's a problem.
Agreed.
Right? And that's how the regulator has viewed it typically, and that's how I think all the ecosystem players should view it. And so we didn't venture in that direction. We stood to gain a lot. In terms of credibility in the ecosystem, when we went back to the same banks when the fiasco happened, and we didn't say anything, they didn't say anything, they had a smile on their face, that you guys turned out to be wise, and we were like, we thank God for that we didn't venture.
Taking that right decision. Yeah. Okay. No, so I will come to you. I mean, again, regulation and regulator has been one of the most enterprising and interesting topic to discuss. I will come back to that. But tell me more about, the profitability. Is your profitability more from the transactions base or the SaaS fees that you charge, to the clients? And, how does this actually the proportion work? For example, if you have to just, if you have to decode, maybe you have $1 million or something, how many clients you will need, how many transactions you will need?
So last year our revenues were about 775 crores.
Right.
And we, have added about, so we were about 2,500 clients then as well.
Yes.
Give or take. So, but if you look at it, a large part of our revenue was from transactions. Software, even from a net revenue perspective, was less than 10%. In terms of gross, was less than 5%. But the beauty of software revenue is you've already expensed out most of the software, right?
Right.
So the entire income that you generate, very large part of it goes straight to the bottom line, right? In transactions, you have other costs associated to it as well, right? But as a blended, combination, it works beautifully because you want engagement from these users. You want them to be liking to use your payment instrument, whether it's a key fob, whether it's a virtual card, a physical card, a credit card, corporate credit card, prepaid card. And that you're able to create that engagement through, certain amount of incentive tools, right? Cashbacks, engagement with the user, and the software adds to the bottom line largely. So that's how I describe it. The software helps a lot of the bottom line, the transactions help the top line and the bottom line. And the bedrock of the business is the software. The software creates the stickiness, right? Because think of it, anybody can go and take a prepaid card from any bank or apply for a corporate credit card, right? Or a commercial card. It's the software where we are API integrated with networks, banks, etc., where you get this integrated experience. Right? For example, one of the things that we've done which has really worked well is anytime you incur an expense as an employee and you scan a receipt, we have optical character recognition to read the fields of the receipt, right? So from one side you get this data from the receipt. Right. On the other side, on the app, we display the card feed from the bank, which RBI permits today, which shows you the transaction details, just like your bank app. And we are able to automatically reconcile the two. One source of information is your receipt, the other source of the information is your card feed. And we are able to display on the back end whether it's, the amount is matching, whether the merchant name is matching, the date is matching, etc. Right? So it's either fully reconciled, part reconciled, not reconciled. And that's a great use case because reconciliation otherwise would have been a very manual and painful exercise for anybody in the accounts team. And typically all these receipts get submitted closer to deadline or after the deadline, right? When the books are to be closed. So all the workload to the accounts team piles up closer to that month end or quarter end. Here the reconciliation is happening for you automatically, at least 80-90%, right? So there are these benefits that we bring to the customer, which really makes a huge difference in their stickiness.
Okay, noted your points. Avinash, now let me move my focus specifically on the prepaid and the credit card after that fiasco. How do you differentiate now? Because the RBI has put restrictions quite clearly into what is co-branded card, why the banks will be there, and how the tech companies will position themselves. So how has that change happened? How are you rebuilding and repositioning yourself on that particular background?
So for us, the good part was we weren't impacted by those changes at all. Our positioning right from the inception was very clear. We are a program manager running programs for banks and corporate customers, where the backend software has always been with a backend, as in the switch software. When I say backend software, has always been a third-party provider that is signed off by the bank, saying, okay, this is the third-party software provider for the switch, right? And we were always on the experience layer. So the mobile app, the dashboards, the expense management capability, the accounts payable capability. So those things continue from our end as the software provider. We issue co-branded prepaid cards as well as credit cards. We partner with 15 banks today. And some of the biggest banks in the country like an SBI card, HDFC Bank, Kotak, ICICI, Access, DBS, a whole host of these banks are our partners. So the data comes in as a feed on our app through the partner, right? It is displayed to the user, and that's where the data storage doesn't happen with us. It is displayed. Whatever is reconciled, that flag is displayed on the back end that this particular transaction was reconciled or yes or no. And that's where the process gets completed, right? So because we were never trying to be a player who was also processing the transaction or authorizing the transaction and the experience layer, we were unaffected by it.
Right. What will be the major challenge that you see going ahead? Because suddenly, while we are talking a lot about consumption story, the disposable income has been going up. People are opting for more loans or something. If you look at the data, I'm sure you will know it. The credit card spend has been going down significantly month on month. Will that impact your business by any chance? Because you are absolutely, have a huge focus on the credit card side. I mean, the prepaid card and the card side.
So I think that you need to split the credit card spends also in two parts, right? So we currently work on the commercial credit card or corporate credit card side, and not the retail card. So I think the impact has been probably more on the retail card side. Commercial cards typically don't go up and down too much unless there is any regulatory change that comes in, right? And we've been consistently gaining market share in the commercial credit card space. We are, in terms of spends, we are a significant player today. We believe that this is a space which is very under-penetrated compared to the size of our GDP.
Okay.
So if you look at global parallels, we'll probably be in the bottom quartile or lower in terms of what is our commercial card penetration as a percentage of our GDP, right? So for an economy of our size, for a country which is as sophisticated in fintech as we are today, we should have a much higher penetration of commercial credit card or business credit cards, whatever you want to call it, right? Compared to what we have today. So the scope is enormous, the convenience is enormous, and with RuPay now opening up UPI for credit cards as well in the last couple of years,
right.
I think the adoption would go up multifold in the coming years.
Okay, but how has the competition shaped up? Because I understand there are one or two more players also entered into this space, and with the RuPay credit card, the credit has become quite accessible than it was, what it was.
Correct.
I mean, still it's a challenge, but still, it is, at least it has opened a lot of layers for people. Do you see that as a competition now going ahead?
See, actually what we are seeing is a lot of consolidation, right? So for example, we IPO'd in September 2023. We had 4 partner banks. Today we have 15, right? All the major banks, if you look at it, more or less we cover, both on the PSU side like a Bob Card, SBI, PNB, and the private ones like an ICICI, HDFC, Access, Kotak, right? And Yes Bank, IndusInd, they have been our partners for the longest time now. So we cover a wide number of these banks simply because being listed, being profitable is a great source of comfort for our partner banks also. They know our numbers, they know that we're profit focused, they know that we're extremely compliance focused. And so that has been a big plus for us. That has meant more business for us, more corporates signing up because they see who are the partner banks and the network effects kicking in there. A lot of the other fintechs also have gone through a sort of a troubled phase because of the funding challenges.
Right.
Many of them have either shut shop or it's been a distress sale. And really, once the founders leave, you can imagine the company is no more, at least in an early stage company or a mid stage company, growth stage company. You need those original, folks who built the business grounds up. To ensure that the company continues to grow for a decade or so further, right? So we've seen a lot of those events happen, and those have actually helped us gain a greater market share. While you never wish any good company, good fintech to close, but those events happen and we stand to gain from that.
So are you open for new acquisitions?
Absolutely. We are looking at growth, organic and inorganic, and we recently raised QIP for about 595 crores.
Right.
As a profitable fintech, our current businesses are doing very well, so we don't need cash. Right? We were sitting with significant cash from the IPO, right? Still, the purpose of the QIP was largely to look at inorganic growth opportunities.
Yeah, so you answered one or two questions already in the flow of conversation, and thanks for answering QIP, reasons behind raising QIP as well. My question to you now is specifically about the regulatory environment. What are your views specifically on the regulatory environment? Because a lot of fintechs complain that the compliance has become the thing for them, which they cannot go ahead with. That is also one of the reasons for them because of which they are closing down their shops. And obviously another reason is they are unable to raise funds. The winter still continues in the fintech space, right? So how do you see the whole fintech and the regulatory environment of fintechs now?
See, I think the regulatory environment has actually segregated the market and the fintech space where the tougher players have survived and are continuing to thrive, and it's a process of natural selection, right? I mean, if you were to borrow from the Darwinian philosophy or theory, that it's almost like a natural selection that's happening, right? And while it's hard to see some of the fintechs who have good products, especially who've not been able to crack that business model which will allow them to be profitable, having to shut shop. That's the nature of the game. That's how life is. And I think RBI has taken the steps it has because they've been seeing things around themselves. And to give credit to RBI, they have been proactive. They have not been reactive. They have not allowed things to collapse before they have stepped in. They have stepped in as soon as they have got a whiff of something which they believe is going to, in the long term or medium term, become a problem. They have nipped it in the bud, right? So I think the rules of the game are very simple. Whether you like it or not, the regulatory environment is going to be very strict. As Dilip Asbe said, if it is not written explicitly as a yes, please take it as a no. Right? I think it's a brilliant statement. In one word or one sentence, he encapsulated the guiding philosophy for what should be the guiding philosophy for at least Indian fintechs. And I think as long as you're thinking and looking at things from that perspective, there is still great opportunity in India. There is still a lot of business to be done, a lot of profits to be generated, and because the space is getting cleared.
Right. But looking at the heavy competition, looking at now, the competition specifically and the challenges with compliance, the funding, what kinds of business models will work in the fintech space? Because we have seen challenges with payment companies, they cannot make money, and that's where you entered into a different space. Lending has become competitive, and either you can only generate leads or you have to take a license from the RBI and then again, become a regulated entity. So what else?
I think each company has to find these answers for themselves. There is no one size fits all. Understand your strengths as an organization. Why should somebody do business with you, right? Why you versus somebody else? What's your right to win? What's your moat? These are all very basic but very deep questions. And as long as founders are able to answer these questions for themselves, first for themselves and then for their teams and then their stakeholders, I think they should be good. If they don't have a persuasive answer, I think it's important to find the answer before you try to scale. Scaling for the sake of it was something which was popular maybe a decade ago or 7-8 years ago. I think it's a strict no today. Fix your business model, get to a stage where you know how you're going to make money. Even if you're not profitable today, that's okay, but you should know why you believe that you'll be profitable 5 years down the line, 3 years down the line, 7 years down the line, and as long as that is sorted, you will be good. I think the compliance scenario or the compliance expectation, whether we like it or not in the industry, is going to continue to be very strict. Right? And that's how we view it. And so to give you a cricketing parallel, right? If you go with the mindset that the pitch is going to be a very tough pitch and the bowling is going to be very tough, and you are playing a test match, if you get a loose ball, you can always hit it for a boundary, right?
Yes.
But if you go with the thought process that, hey, today is my lucky day, let me go swinging, you can nick it once and you're gone, and that's how it is.
So lucky days are over.
Lucky days are over. Yes, easy batting pitches are over, right? DRS is there, so you got to be on your toes and you got to be very vigilant. But as long as you're doing that, you definitely will stand out in the crowd. You will definitely be the one who will be making the profits and will be looked up to by the ecosystem and a lot of the other investors, etc.
Oh, sure, agree. And now comes to our last question, specifically again about Zaggle. We spoke about the profitability and how you started and chose a different model. How do you see yourself maybe in next 3 to 5 years if you take a roadmap of that, and if you could do some maths for me, how long will it take for you to generate maybe 100 crore profit? You're already half of it. You already crossed 40 plus profit last year, 40 crore plus, right? So how long will it take for you to reach to maybe 100 crore, and how do you see your roadmap specifically for Zaggle in 3 to 5 years?
Well, I think 100 crore is not far away at all. I will not want to put a date, but hopefully when you see our Q3 numbers, you'll also agree we already have generated decent amount of profitability in Q1 and Q2, and when you add the 3 quarters, you'll possibly have a different view. But 5 years down the line, I think we will continue to be in the spend management space. We'll be looking at both market leadership in India. We'll be looking at possibly a few markets globally where we'll be interested in entering. I think there's a huge opportunity in India today. India is in the spend management space. We've just scratched the surface. So we see growth in India at least for a decade or two, if not more, in the spend management space itself. But we will look at opportunities in other markets as well if it's worth our time and money. Even if those opportunities don't emerge elsewhere, we are very happy to be at home in India and continue to grow profitably.
Sure, noted your points, Avinash, and thank you for being part of FinTech Diary and sharing all those relevant information with us. Thank you so much for being part of FinTech Diary.
Always a pleasure. Thank you so much, Amol.
Thank you. And thank you so much for watching etbfsi.com. Stay tuned.